Hello traders, and welcome to the real-time supply and demand video. In this video we're going to talk about the benefits and the application of using supply and demand in trading the pound dollar. Let's go and talk about some of the market vitals of this market. The market pair is called the British pound to the US dollar. The ticker symbol is GBPUSD. The pip value varies with Forex, can be as small as 10 cents a pip. Some brokers will let you go less than that, to as much as $10 a pip or more. So you can go from a micro contract to a mini to a standard contract. So micro is 10 cents, mini is $1 per pip, and standard is $10 per pip, but you can go much higher than that, $40, $50, $100 per pip if you like. Now there's no cash open or cash close per se, since it's a 24-hour market, so the high volume times to go ahead and trade would be from 3 a.m. the London Open until 4 p.m. the American close, Eastern Time. The night session is tradable. You can trade that from 6 p.m. to 3 a.m. Eastern Time. The important news events that can occur that can affect this currency is the FOMC, Central Bank, GDP, world events, CPI, PPI, and non-farm employment. As a reminder, trading does carry significant risk, and all information in this video is provided for educational purposes only, is not offer or recommendation to trade future stocks, options, or Forex. So some of the key features of this tool is it marks zones or areas of extreme supply or demand, and has the ability to customize to any chart type, any time frame, or any market, including futures, ETFs, stocks, and Forex. Now here's what the tool looks like here. You have the pound dollar here on a 15-minute time frame. You put this on any time frame, and you can see that you have these red zones here. This is your supply zone here. You have a couple supply zones, and you have a couple of these green zones here, which are demand zones. Now, what you'll notice here is that these supply zones here, these are the original, what they look like originally. These are supply zones that have not been retested. Here's another demand zone here that has not been retested, dark green and dark red. When they have been retested, what that means is that this zone was created here, price moved out of it, and then came right back in and retested it, and then started to trade off here. So once the price moves away from it and it comes back, it'll go ahead and go to a lighter shade red. For the demand zone, it was created here, and you see the spike out, and then came right back in and retested it, and that gives it the light green color. So it'll be dark green at first, and then go to light green once it's retested. You have also a convenient button up here to go ahead and hide the zones or show the zones if you'd like. Now, how can this indicator help you with your trading? The real-time supply and demand tool calculates imbalances from volume, blocks of volume, and order flow activity. So for Forex, it's using ping volume or tick volume coming into the market. But a very important distinction here is it's not just price-based. It is using that volume along with price to go ahead and calculate these zones. This helps you measure and visually identify key points within the market. Here's a couple different ways you can use the supply and demand tool for trade setups and triggers. So this can be a system up by itself. And the system here is that once the zone is created, look for a quick retest. So you can see this one here came back down and then started to retest the zone here, but gave you a good opportunity to go ahead and go short here. Ideally, you want to see a short right around here, kind of early in the box, but this one still worked out. Your risk would have been above this box here, and this is actually a pretty nice trade here. Probably got 2 to 1 on this one. Here's another one here. Supply zone was created on this candle. You went out of it and then came back, retested, and gave you another nice trade to the downside. Those retests work out really well. Another one, you have a demand zone here, and you have the price move out of it, came right back, retested it, and gave you, again, another nice long trade here. So you can use this as its own setup and trigger using supply and demand along with price action. Support and resistance, as you can see here, can act as pretty good support and resistance. As a matter of fact, most of our traders will use it for that reason just by itself. Risk to reward analysis. So you can go ahead and see right away, if you're short anywhere in here, you know exactly where to put your stop here. If you're long anywhere in here, you know exactly where to put your stop, just below the box or just above the box. Really easy to go ahead and identify risk reward here. And as a matter of fact, on the right hand side, you can go ahead and see exactly how much pips you're risking on each trade. Sentiment. So if you're coming into a market and you see a lot of red zones here, or supply zones, that's indicating a pretty bearish market. Same thing for a bullish market. You see a lot of green zones, that's a pretty bullish market. You see a mix between red and green, it's a range type of market, and you need to adjust your trading tactics accordingly. So it can tell sentiment right off the bat just by visually looking at the chart. So let's go ahead and jump into the chart now, and I'll show you how to set this up. You want to right click and go into indicators. go down to your NCAT RSD tools, load it in, and hit OK. Pretty simple there. And there you go, loaded on and ready to go. Now if you want to hide the zones, you can do that, or if you want to show them, just go ahead and left click it right there. Let's go back into indicators and talk about some of the settings. Extend zone minutes here. You can go ahead and put this at 240 and extend the zone out. Click that box there and hit apply. You'll notice the zones will actually go out further now. So if you're doing any type of projection or analysis, it can give you a good idea of where these can certainly go, which is by projecting them out. All right, no weak zones. So if you want to see weak zones, I'm not sure. Yeah, we have a weak zone down here. You can go ahead and show those if you like. I don't like to see weak zones, so I'll go ahead and leave that off, but you have the option of seeing weak zones here. Recolor retouch means that when the price moves out and comes back, it'll go ahead and recolor these boxes. If you don't like that, go ahead and uncheck that box. Recolor weak retouch, so it means if the weak zones get retouched, it'll go ahead and change to a different color. Time frame type and value. Now this is important. If you go to a 15-minute, you're going to see 15-minute supply and demand zones. It's 10-minute, you'll see 10-minute supply and demand zones, and so on and so forth. However, if you change this to, let's say, minute, and put 60 on here, what that's going to do is calculate the zones now based on a 60-minute time frame. So it's like having two charts in one. I'm looking at a 15-minute chart, but all these zones are 60-minute supply and demand zones. Now if I go to a 5-minute or a 30-second chart, there's still going to be 60-minute zones. So that's a pretty cool feature here. Go back to chart period, so now every time I change it with the chart, or change the time frame of the chart, the zones will update to that chart's time period as well. Now data series setup and visuals, all this, you don't want to change anything here. Colors is just cosmetic if you want to change the color of these boxes. The main edge price are these numbers here. So this is telling you that right here at the top of the box, the price is 130.56 and 130.47. The bottom of the box is 130.91 and 130.94 and 131.22. I want to see the other side of the box here. Far edge price, we'll go ahead and show that here. Now if I want to see, and this is useful for risk reward, I want to see how big these boxes are. You can see here it says 268, but that's actually for Forex. Just move it one pip over, so it actually reads 26.8, 7.8 pips, 6.4 pips, 5.2, and 9 pips here. So again, just move it over just one decimal point, and it gives you the pip risk for each supply and demand zone. Now, if you want an email every time a supply zone or a demand zone is created, it's very important. You have to put your email in all three of these boxes. So you can go ahead and get those emails. By putting your email in here, it triggers it and turns that feature on, so it goes ahead and sends that email to you. So make sure you put it in all three boxes if you do want an email. Alert is just audible alert, so every time a demand zone or supply zone is created, you can go ahead and, or touched, you can go ahead and pick one of these WAV files for demand zones or supply zones. Once you're done, go ahead and hit OK, and you're all set and ready to go. So thank you for watching this video. I hope you found it helpful, and happy trading.